Question 2. Melody and Olivia commenced a partnership business on 1st January 2023, sharing profit or loss in the ratio of 2:1 after allowing interest on the capital introduced by partners at a rate of 10% per annum. Olivia was to receive a salary of 80,000 shillings per month starting from 1st February 2023. Melody and Olivia have not employed a qualified accountant, hence the business lacks complete accounting records. The following summary of the bank statements for the year ended 31st December 2023 was provided. So we have the receipts, then we have payments. That is a summary of the bank statements. Summary of the bank statement. And note that these were prepared by the accountant who is not qualified. The following cash payments were made before banking the balance of the cash received from customers. There were payments that were made: motor vehicle operating expenses, wages, general expenses, drawings. Additional information number 1. During the year ended 31st December 2023, discount allowed to customers amounted to 245,000 shillings, while discounts received from suppliers amounted to 110,000 shillings. Number 2. As of 31st December 2023, the amounts owing to suppliers amounted to 1.5 million, and the owing amount by customers was 3.1 million. An amount of 400,000 shillings owing by a customer was written off. Number 3. As at 31st December 2023, rates and insurance prepaid amounted to 50,000 shillings and 10,000 shillings respectively. 4. Inventory was valued at 2,410,000 shillings as at 31st December 2023. 5. The godown had been occupied since 1st January 2023 as an annual rent of 1 million shillings. 6. Depreciation is provided on a straight line basis as follows: motor vehicles 20% per annum, equipment and furniture 10% per annum. Number 7. The partners had taken goods for their domestic use as follows: Melody 100,000 shillings, Olivia 150,000 shillings. Assume a 52-week year. Required: Roman 1, partnership statement of profit or loss and appropriation account for the year ended 31st December 2023, 10 marks. B, partners current accounts as at 31st December 2023, 4 marks. Partners current accounts. Partners current accounts. 1, 2. These are 2 partners. 1, 2. Melody, Olivia. Melody, Olivia. Shillings in thousands, shillings in thousands, shillings in thousands, shillings in thousands. So, since the partnership began on 1st January, there are no balances at the beginning. There are no balances at the beginning. So, this account is debited, or let me start with the credit. This account is credited with what the partnership owes the partners. What the partnership owes the partners. And debited with what the partners owe the partnership. For example, here, after this profit, all right, this one, we've seen that partners come together so that they can make profit and share the profit. So after the profit is made, the partnership business is required to pay the partners interest on capital. So the first thing that the partnership owes the partners is the interest on capital. Interest on capital. Melody 700, Olivia 400. Other than interest on capital, we've seen that the partners agree that Melody will be paid 80,000 shillings per month, and this payment began in February. So the partnership business owes Olivia 880. So this is salary 880. This one is not paid salary. Then there is profit share. Profit share. After paying interest and salary, the partners are to share what remains. So 417 is what will be shared in the ratio 2:1. Melody 278, Olivia 139. So the partner's current account is credited with what the partnership business owes the partners, and debited with what the partnership business, all right, it is debited with what the partners owe the partnership business, the opposite. A good example is drawings. We read from this question that the partners had taken goods for their domestic use. Goods, drawings. They withdrew goods for their own business use. Melody 100,000, Olivia 150,000. Apart from goods, I think they also took some money. Look at the cash payments. After receiving money from the debtors or the customers, look at the information there. We read that Melody withdrew 15,000 shillings per week. So it was 15,000 times, this is drawings, but cash. I think we calculated it somewhere, the drawings. This was, we didn't calculate that. We did, but I rubbed. So 15,000 times 12, how much is it? 15,000 times 12, 780. Then 12,000 times 12 is 144. No, times 52. It is 15,000 times 52. Is that what you are doing? 15,000 times 52. Is it 780? Then 12,000 times 52. 624. 624. 624. 624. 624. So give me the balances on this account. Give me the balances on that account. Give me the balances as I prepare the format for the balance sheet. As I prepare the format for the balance sheet, the statement of financial position. This is Melody and Olivia. Statement of financial position as at 31st December 2023. So you have the non-current assets, net book value, depreciation, cost. Give me the balances. Give me these balances. 978. What is 978, Kevin? Melody 98. Melody 98. Is it debit or credit? Credit. 98 645. 98. This is balance. Credit. Someone tells me credit. Must be on this side. Balance carried down. 78. 78. Is it 978 or 98? Olivia 1417. Balances. Olivia balance 645. 645. Is it 645? So make sure you have these totals. Put down the totals. Daud has confirmed. So let's move on to the statement of financial position. We begin with the non-current assets, the ones that were bought. Non-current assets, the payments you can see there. We have equipment. And candidates, make sure when you are doing the statement of financial position, make sure you categorize the non-current assets from the current assets, and the non-current assets, make sure you have the column for cost, for depreciation and net book value. So the equipment there is 5 million. Then we have motor vehicle of 2 million. Then we have furniture and fittings of 750. I don't think there is any other asset. Depreciation we had calculated. Someone give me the depreciation for motor vehicle here is 400, 575. 400, 575. Give me the net book values. This you get the total, you close it. Get the total, close it. And this is 750, close it. This is 975, close it. Give me the net book values for equipment. 5,000 minus 400. This is 46, is it not? 46. 2 million minus 500. 1.5 million, is it not? 750 minus 75, that is 6 what? 665, right? Furniture and fittings. Furniture and fittings. One just says 675. 675. 675. 675. Give me this total. Total net book value. Total net book value. 6775. 6775. 6775. So you don't close it because we need to have here the current assets. Current assets, we begin with inventory. Closing inventory. From additional information, we have closing inventory. Closing inventory of 2410. 2410. There is also the closing accounts receivable. Accounts receivable. These are balances, debtors at the end. I think we have it. We had it there somewhere. Where was it? Where was it? Not number 2. The amounts owing to suppliers amounted 1.5. Amounts owing to suppliers 1.5. Amounts owing by customers 3.1. So here we have 3.1. But there was the bad debt that was to be written off of there was a bad debt to be written off. How much was it? 400. 400,000. So the balance is the accounts receivable, the debtors. 3.1 minus 400. How much is it? Or was it deducted? Because both are in the additional information, so this is just 3.1. 3.1, that is 3.1. Accounts receivable 3.1. Accounts receivable 3.1. Then what else? What else do we have here? We have bank. The bank will have to have a working. To determine the amount in the bank, we need a working. But we also have, you will recall in note number 3, there is prepaid rates. Prepaid rates. We have also prepaid insurance. Prepayments at the end of the accounting period, these are current assets, 50 and 10. 50 and 10 respectively. 50 and 10 respectively. What else do we have? So candidates, we may need to determine or calculate bank. All right. So these are financed. I've left here some. I've yet to calculate that. So this will have the total. So here you have total assets. Total assets. These total assets are financed by capital, the capital that was injected at the beginning, receipt. You can see capital introduced Melody, Olivia. Melody introduced 7 million, Olivia introduced 4 million. 7 million, 4 million, 11 million total. Then we have current accounts, Melody, Olivia. The balance is here, 78,645. 78,645. What is the total current assets? It was supposed to be 98, not 78. 98. 98. Someone says 98. Was it not 98? Is this 98? 98. So give me the total. 98 plus 645. 743. 743. So that will be the total. We are supposed to do the financed by that. This is capital. So we need to add the liabilities. So can I rub here? Can I rub here, please? These total assets are financed by capital and liabilities. So we have liabilities. The first liability is accounts payable. Accounts payable, which does not need calculation. If you check note number 2, the accounts payable amounts owing to suppliers is 1.5 million. 1.5 million. This is 1.5 million. Then we check if there are any accruals. You remember the go down rent. Go down rent of 250. That go down rent of 250 has not been paid. It is a liability. We add it to 1.5 million. Do you have any other unpaid expense? Any other unpaid expense? If there is no any other unpaid expense, so take this total. 1500 plus 250, that is 1750. 1750. You add it to the capital. That will be total capital and liabilities. Total capital and liabilities. So we need to do a working for the bank. That is the only item we need to calculate. Bank. We need a working for the bank. Bank account. Bank account. The bank account is not given. So have that working. Bank account. Now for the bank account, we are going to check all the information that we've been provided. Then we determine what is the balance of the bank at the end. What is the balance of the bank at the end of this period? So you can see, first of all, we have the receipts. On the debit side, capital, Melody, 7 million. Olivia, 4 million. Then we have cash received from customers or debtors of 25,400. Then we have payments. Are you following? The payments. The payments, we have purchase of, I'm reading from the question, equipment, 5 million. Motor vehicle, 2 million. Furniture and fittings, 750. Rent, go down rent, 750. Wages, 3544. Salary, 2400. Purchase of inventory, 19800. Rates 400. Repairs 125. Insurance 110. Motor vehicle expenses 375. So what is the balance? Give me the balance. Give me the balance. Give me the balance. 1148. Kevin says 1148. 1148. So this bank balance is 1148. Then give me the total current assets. Add these total current assets. Current assets 13493. 13493. Add current assets to the non-current assets. Give me the total assets. Give me the total assets. 13493. 6718. 6718. 6718. Give me the total assets. Total assets. Total assets. 13498. 13498. Then give me the total capital and liability. Is it 13498? 13498. Is it 13498? Correct. 13498. So candidates, thank you for attending the lesson. Bye bye.